Good afternoon and welcome to the daily market update from FP Markets, coming to you from a humid and grey Sydney, actually, but not too grey now on the ASX, two doors down the road from us. Perked up from negative earlier on, just sitting to the top side, only 0.1% higher, Hang Seng 0.17. A pretty quiet day, to be fairly honest with you, here in the Asia Pacific region and more importantly in Australia. Obviously yesterday we had the RBNZ, which gave us the expected 0.25 increase in their base rate, but also sort of gave us a little bit more, turned a little bit more dovish, and that did sort of hit the Kiwi for us to a certain extent. I'll show you here. And as you can see, the rest of the move from the Kiwi sort of came post the RBNZ impact, I suppose, and it's more from dollar strength than from Kiwi weakness. But as you can see here, probably the best indicator, once you take the dollar out, the biggest traded cross would be the Aussie Kiwi, and we are a little bit higher, and that proves that maybe that dovish, the slightly more dovish sentiment than expected, I should say, from the RBNZ helped that sort of like weakening with the Kiwi on the crosses. And as you can see there, Euro Kiwi, I've sort of kept that longer term line, and we're back around that 163 the figure level. So just looking across the markets today, as I said, really relatively quiet now. I suppose the big action once again came overnight. We saw the dollar appreciate, and stocks had sort of not too bad a day in the US. The big data prints probably for the week, but certainly for the US. So we had GDP numbers. Now they came out slightly worse than expected quarter on quarter, 2.1% against 2.2%, but not really doing too much damage to expectations on Fed tightening and tapering. It's probably an article in that, isn't there? Tightening and tapering. Core PCE as well, which is obviously something that we know the Fed pays a lot of attention to, came out dead on expectations, 0.4% increase there month on month. So I suppose that's more likely to keep the Fed watchers and the Fed officials in line with what they've been saying. We have heard from a few over the week, and they are talking about sort of increasing that expectation of speed of tapering, and obviously on the back of that, I suppose we've got rates going to the top side due to the fact that we're expecting maybe a quicker move to the rate hike from the Fed. That's what's dictating these moves, and that's what's continuing to see the dollar higher over the last few days and last few weeks. In effect, I think we're at sort of almost a 5-year high, I believe, against the yen, and certainly sort of about an 18-month, I think off the top of my head, against the euro, which is obviously a big part of the dollar basket. Looking ahead to tonight, it's a little bit quieter, I would say, on the data front. Thursday session, after that sort of Wednesday, we're looking for a little bit of fresh impetus, I would say, but the trends probably remain intact, especially for currency traders, that you would be looking for levels. I think nothing's changed too much, that looking for levels to buy dollars. So I'll skip across the currencies now, and we'll just have a look at certain moves we've got, and if there's anything that's looking particularly attractive to traders. So Aussie's still on the back foot. It's been grinding lower. Not a particularly exciting trade, but it has sort of got there. We're down around 72 cents now. I think we do need another kicker to drive it lower. As you can see here, there's a lot of strike pollution around about the big figures in the 50s in Aussie, and I think that's what we're seeing here with these sort of trading patterns. It is going lower, but it's certainly not crashing at all. As you can see here on the daily chart, for me, it has broken into a lower maneuver. I'm probably going to be looking at these lows back here. That's 71.50ish or 71.40. Those like that lowers there. Well, come on, you're going to help me on. Yep, 71.40 again. I think if we get a clean breakthrough there, that's probably going to come with overall general dollar strength, but also probably a little bit of a kicker on the Aussie side of that equation. Then I think it does open the way for a bit of a move lower in the Aussie. If not, it wouldn't surprise me if we see the Aussie sort of range bound, certainly into the new, like from now and into the new year. Over to the Kiwi, had a little peek at that before. A good move, right? So a good move. RBNZ expectations were for hiking, but it has gone the other way, and that's more to do with dollar strength, as I said, than Kiwi weakness. But we have got that combination. So people are looking at like what's a relatively basic trend line, but it was a long-term one all the way from lows back Q1 2020. Decent break there. It's reflected here. It was at the same line on the Owlies as well, which is always a good indicator. 69.90, you get short there, bang, you have a nice little move, nice little decent big figure lower. where the Kiwi goes from here, like Kiwi against the dollar, as I said, I think the dollar's going to dictate that rather than the Kiwi side of things. But I think there's some place for Kiwi on the crosses. Sterling, another one, has had a really good move. I mean, even on this hourly chart, I extended out yesterday. Obviously, highs back in early June, up sort of 142.50. When we're now, we're over 10 big figures low, nearly 10 big figures lower. So that is one of the reasons why sterling is one of the biggest products that we've got coming through FP markets at the moment. It is moving and there is volatility, and it does give some fantastic trading opportunities for traders out there, day traders, and of course some of the longer term guys. And as you can see here, for me, it's just dipped underneath what was a very long term trend line support there. Once again, I think the dollar's probably going to dictate things, but the sterling side of things might have a little bit more to do with it. So keep an eye on any of those Bank of England comments. And Bank of England Governor Bailey is speaking tomorrow. I think it's somewhere like the Cambridge Union, but anytime he speaks, do pay attention, because this is when we're starting to get those moves in currencies. We are starting to see disparities regionally. We're seeing disparities regionally with COVID, recovery rates, data, and this is what's going to get the current, and it is getting the currency market starting to really rock and roll. For the last sort of 12 months to a year, 12 to 18 to 2 years, we've had the race to the bottom in rates, and that's really not given those strong interest rate differential reasons for the longer term traders. But now things are starting to kick in. We're starting to look at different expectations from different central banks, and that's really getting the currencies moving. So we are seeing some decent moves, and yes, we've had some decent moves down. Like obviously, I just mentioned the cable. Euro, like highs up here 123.50, we're 10 big figures lower than that as well, but it does not say that this trend will not stop here. It could continue. We do need to keep an eye on the Fed. Obviously, something I'm keeping an eye very closely is that COVID I suppose resurrection and how it's coming back and it's affecting economies in Europe. Obviously, Austria's shut down. I actually haven't checked my news today to see if Germany were talking about following. I'm not quite sure whether they had, but if we do start to see those lockdowns coming in, then expect to see a little bit further pressure on the euro in that sort of the mainland continent there. As you can see here, really it's probably a sell on rallies for euro at the moment, but another good trade on that. That's a longer term daily chart we had in, and this is the hourlies. Like we've sort of got a little bit of clear sky all the way back up to 116. The figure dollar yen bid on dips still coming in really nicely there. There's something I think I mentioned on Tuesday's update as well, hearing from guys in the market that the usual corporate flow out of Japan, and some of this is due to the high oil price. We're not seeing the sellers of dollar yen, the big corporate players out of Japan, as much as they normally do, and that's what's led to probably just giving another tick in the box for those dollar yen bulls. Yen crosses, different story here, and I mean, and this is probably something I was sort of talking about before. Euro yen's just come off, sterling yen's still just come off. We've got slightly different time frames here, as you can see from the bottom, and I probably should be comparing apples with apples. But plenty of volatility in the yen crosses, and I think that's something to play. If you want to take the dollar out the equation when you're looking at some of these regional disparities that are coming up and are bringing trading opportunities, then maybe like the yen crosses, you do get a lot of decent liquidity in them as well. So it's a good play. Dollar CAD has dropped off from the highs. Now we have seen oil sort of creep back a little bit higher as well, so that's helped CAD strength. Dollar's just dropped off. I mean, here we got the loonie. It's come down from 127.50. We're a big figure off highs. It still fits in with this sort of like channel that we see in the longer term daily parts, but certainly something to keep an eye on. Keep an eye on CAD. Keep an eye on the BOC over there as well. I think I reiterated this the other day. One of my favourite charts at the moment has been the Swissy. We had seen a little bit of a movement to the top. It wasn't a great break to sort of reset those here, but it has been trading quite reasonably off the trend lines recently, and I'm keeping an eye on this Euro Swiss. We're not seeing any real evidence of it yet. There may be a bit of smoothing involved, but we are sort of at, as you can see, multi-year lows. In fact, I'll bring that chart out now and see if we can take us back to the last time we saw these levels. And here you go, and there's the chaos from the SMB before. And this is why people are talking, sorry, I'll bring this chart in so it just gives a little bit more clarity. This is why people are talking and why there are murmurings of the SMB coming in. This is when they held held the cap, which to us currency traders was a base at 120, so a cap in the Swiss. This is where they let it go, bang, one of the biggest moves and in almost currency history, I suppose. And this is why we're looking at maybe the SMB coming in or smoothing, because we've had these lows here, Q1 2020, Q2 2020. It had a base around 105 and we've slipped underneath it. It's not flying, obviously, but there are rumors around the market that we could start to hear a little bit more from the SMB, and whether it's going to be jawboning or whether it's going to be some concrete action. Something to take into consideration if you are trading either the Swissy or the Swiss pairs. Just moving across to some of the other products that I've got on here. Gold has moved really nicely. We've seen gold come off, dollar appreciate. That's probably not too unexpected. It was taken off to the top side, as you can see here on my longer term chart. This is a daily chart. We're still sort of nicely in this sort of range bound area, but we are seeing quite a lot of volatility. So trading opportunities are good with gold. That's the short-term chart there, but they're very much the same, the hourlies and dailies at the moment. For me, just a bit of a bow the head to Bitcoin. I've only just got the Bitcoin out of the cryptos up here, but it has dropped. I mean, we're still seeing volatility in the cryptos. As I said, I think Tuesday, nearly up to 70,000, and then we're down sort of like 57.5-ish at the moment. So plenty of action in that, but obviously big moves, big percentage moves, and manage your risk and your capital management accordingly. This is that little move I was talking about when I was chatting on the CAD. Oil sort of like found a little bit of a base around about $75 a barrel, has just jumped up to just under 80. Oh my God, getting there, highest, yeah, 79, nearly $79 a barrel. So keep an eye on that for not only the CAD, I suppose, but the NOK, Saudi Arabian, and all the petro currencies. Just finishing off with the stocks again. As I said, I think we need fresh impetus now. The trend for currency seems to be set unless we get a change, which would be buy dollars on dips and breaks as well to a certain extent. For the stock markets as well, some are coming off, and we're seeing disparities in the global indices as well. So some are coming off a little bit harder than others. US stocks, as we can see, and this is probably reflective of the good numbers that we're getting from the States, really, taking aside that PCE, which was only a 0.1 off, we're still sort of at historical highs in the S&P there. In the NASDAQ, as you can see here, we're just off those historical highs, but like they've had fantastic runs. There probably is a little bit of a retrace to come, but keep an eye on those US numbers as they go forward. So that's it from me today and probably for this week. So have a fantastic trading day. If you need anything from us at FP Markets, please do let us know. Thanks very much for listening. Cheers.